Hi everyone, what a day today. You can see massive down move, massive up move immediately following all the way through earnings this afternoon. In the morning time, we did have that GDP number, did not come in good at all. Markets seem to not care too much about that. Right now, the story is earnings, and so far earnings have been pretty good, but let's take a look at the charts and see if we can find some direction for tomorrow. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So like I said, Trump blamed Biden for bad GDP numbers. He's also already blaming him for Q2 GDP numbers, which are expected to be quite bad, and I do expect them to be bad as well. We have seen the Atlanta Fed GDP numbers, which were very close for Q1, and for Q2, they're projecting like 2.5% down, so negative 2.5% growth for Q2. So expecting strong declines. If we do get 2 consecutive quarters, that means we're well on our way to that 4 consecutive quarters of negative growth, which would be a technical recession. And I do think that that is the base case at this point. A lot of big banks have come out and said greater than 50% chance of a recession this year, and I think that is going to happen. And the question is, when are markets going to realize this? Is it going to take those Q2 GDP numbers? That would be a trend, 2 points. 1 point is data, 2 points is a trend, and is that going to be the move that starts to break down markets? So you can see GDP fell 0.3%, worse than expectations. And of course, Trump is blaming Biden, playing politics, but on the technical side, we have to assume that negative GDP growth is going to continue, in my opinion, and the jobs market continues to be not so great, and we'll take a look at that data later as well. And then in other news, Microsoft jumped 9% on earnings. They did really, really well. Everything beat. Azure, being their highest margin business, also did really, really well. They do tend to do well on earnings, and I just thought maybe we'd get a bit of a nothing burger, more similar to what we got out of Google. It was good, but not amazing, but this was really, really good, and this pushed them back into those levels that we'll look at on the charts, where you have to start to look at those upper most recent highs as a potential target. You can see revenue 13% year over year, net income 18%, really, really strong numbers there. And they're continuing to spend huge money on data centers, on that CapEx spend for AI infrastructure. So they don't seem to care at all about the tariffs or the trade war or any of that. They are continuing to make money and continuing to invest at a very aggressive rate. Moving over to fear and greed, we actually got to step down to a 35 from a 37 despite the price action being pretty dramatically bullish in the end of the session. You can see breadth has moved into greed now. Interesting. Really, really strong moves on breadth over the last couple days. Put call ratio turning back up on a day like today. Interesting. Volatility stepping up as well. Safe haven demand not moving, and junk bonds stepping back into neutral. So kind of mixed context here. Interesting to see breadth holding up so well, but still in fear overall as a broader market. Moving over to the economic calendar, you can see GDP for the Eurozone actually pretty good, better than expectations there, but Q1 for us minus 0.3 versus the 0.2 expectations. Atlanta Fed continued to predict that this was going to be the case, and it actually did come to fruition there. So that is not what you want to see. Core PCE prices a little bit higher than expectations there. Core PCE index in line with expectations. Core PCE index month over month a little bit worse than expectations there. Chicago PMI also not great. So a lot of the economic factors not super great. And then pending home sales, really, really interesting move there. We talked about this in one of the shorts that I put out here recently. Pending home sales, this is getting front loaded a little bit with the lower interest rates that we are seeing right now. And then you can see Atlanta Fed GDP for Q2. 0.24 is the expectation. And then I did also want to mention ADP non-farms, 62,000 versus 114,000. Previous number was revised down as well. So jobs market, not great. For tomorrow, not a whole lot there. Atlanta Fed GDP, 2.4%, continuing to sit in that range. And then looking at ISM manufacturing data for tomorrow, but the big data is going to be that jobs data on the Friday. Does the unemployment rate step up? And we missed that 4.2 expectation. That is going to be very interesting. Moving over to earnings, you can see green across the board for those biggest players, even Qualcomm doing pretty well today. Caterpillar, not so much. So outside of tech, a little bit of weakness. Interesting. Yum Brands, we talked about them coming out today. Missed on the top line, beat on the bottom. Okay, good there. Garmin missing on the bottom line. And then for tomorrow, you have Apple, Amazon, Eli Lilly, MasterCard, McDonald's for the heavy hitters, as well as MicroStrategy, always an interesting company to watch. And that'll pretty much wrap it up before we get into those bigger oil plays for the end of the week. Moving over to the charts, look at today. We finished unchanged on the S&Ps. Huge dip, almost down to that 9 EMA, which was sitting at 540, and then we ended up rallying through all session, closing right at the level, and then in the after hours, you can see about $4 to $5 almost of upside momentum. Continues to fade here. Is this the zone where we see it roll off? Potentially. Understand that after hours price action is in here around 558. Got that 55 EMA on the daily chart sitting all the way up there at 562. I think that's probably in play for tomorrow. You have the clean gap fill. We did fill it yesterday, but we're stuck at it on a closing basis, and then we'll see if we can get through there tomorrow. Interesting volume coming through there today. Overall, this has to be a pretty bullish setup. And you can see it here on the hourly chart. Big step down on the price, almost came down to that 540 level. That's what we were looking for. If 555 broke, that was the midline. Really choppy on the level, as you would expect. Not a clean break. And then that last candle of the day, really strong push here. Continuation into that earnings. And then we did get the continuation in the after hours. Let's go ahead and extend out this trend line. That gives you a price target potentially in here around 563. Again, pretty much in line with that 55 EMA on the daily chart. And then moving over to those tasty charts, we did end up pushing up to that second ATR band target that we talked about yesterday, 559.64 was that level. Yesterday it was a little bit lower, 558.38, but that one step up here, and then we did get the continuation to that level back above the 8 EMA. We said as long as we held above that, we should be in good shape, but we did throw that wick to the downside that I did expect yesterday. So not as much of a down move as I thought might happen, but ultimately we did end up continuing higher. And so far this structure has held up a lot better than I would have expected. And then moving over here to the Qs charts, you can see we rallied right up to that trend line. We were watching that trend line on the charts yesterday. We said that was the zone of resistance. We did get the rejection from there yesterday. You can see it here cleanly on the hourly chart, and sure enough, we did get the continuation down into that news announcement, but then buyers came in at those levels right at this kind of trend line zone here, and then we finished almost unchanged on the day, and then in the after hours, really strong push to that 55 EMA, 481.19. We'll see if that zone holds, or is that going to be another rejection? You can see last time we got into this zone, we broke down, hit the 200, big sell off. Are we going to get to that 200 again and then get a big sell? Or is this the time where we're going to get a bigger push through there? I just don't believe that earnings is going to be strong enough to drive us through and get a change of structure. Right now, you still have a high, lower high here. Are we going to get maybe a double top in here? That could be interesting. That would take you to 492. But I realistically just don't believe we're going to get a change in structure. We may, but I don't think it's going to happen. And then looking at the levels here, you can see important level was 477. We said if we could get above it, we would have a nice little push. In the after hours, so far so good on that, broke above it, and now we are continuing. Your next level is going to be 486. In terms of price action, I was looking for a rejection off of here. 471.06 was the level, and I did go short at that level and obviously got really heavily squeezed, unfortunately. And then I didn't follow my rules and go long on the level break. Should have held it here on that 1 o'clock candle, continuation into the 2 o'clock end of session. I just did not do it. I was really disappointed with that we didn't get the sell rejection off of here, and I didn't really want to keep trading off of it, so I didn't, which was unfortunate. I didn't expect it to be this dramatic, but it was a nice trade if you took it. Got the level break here, held on that next candle, continuation higher. And then similar story as we move over here to the Q's Tasty charts. You can see that ATR band there was sitting at 481.39, right in line with that level that we talked about. Your next band to the upside would be 487. This continues to be bullish conditions. Once we flipped into bullish conditions here, I should have bought into that thesis, and I just didn't. So far, it's been bullish conditions, and that has been the trade ever since the level break here back on the 22nd. Moving over to the Russell and the Dow, I want to highlight here the Russell did stay negative about 0.5%, and it continues to hover in there right around 194. Got back below 195, could not hold, and you can see momentum stepping down down, more in line with what I expected to happen today. Even with that, the bounce was really aggressive off of 191.89, and that was more aggressive than I thought that it might be, but I still believe this is going to kind of consolidate in here and then pull back some. That step down on momentum is not a good indicator at all, and right now I believe if we were not getting good tech earnings, this is what the rest of the market would be doing. And you can see the Dow, nice little candle there, still held above 404.47 after pulling back all the way down to 398.76. So you had a nice little trade there, could have bought it at 404 as well on the move. Either way, though, this continues to look bullish. Looking for this to push to 411 to potentially 412. That would take you above these levels. Maybe you're still looking for a gap fill, which would take you back to the 55 EMA there at 416.50. Moving over to the Mag 7 here, you can see the Mag 7 was negative, down about 1% headed into that earnings. But looking at that hourly chart here, you can see the huge candle up, pushing through that 273 level. That was the major resistance. We were chopping there, could not get above it, pushed back below 265, and now we've gotten the breakout here. Are we going to get to 283 tomorrow? 290 is in play if that happens. And you can see that 290 level is the zone we were in just back here at the end of March. So are we going to round trip this move? So far, this is still bullish conditions, waiting to see if we can get into that zone there or not. And with earnings continuing to be good, you have to expect we can still go higher here on the Mag 7. Moving over to Apple and Microsoft. Apple is still positive above that 211 level here today. We closed above it, so that's good. Looking for 217, potentially 224 as your next level. Momentum still bullish, RSI still bullish, and then look at Microsoft up about a third, got above 394 at the close, so you could have bought it on that level break into the close. I don't know if I would have done that. I certainly didn't, but you could have. We're right there. We did have the break. And then looking at that hourly chart, pushed clean through that 413 level. That's where we said we were going to go if we did close above 394. And sure enough, we went right to that level and then continued to the next one, 429.88, touched that level and started to have a little bit of a rejection from there. I don't know if I would sell that by any means, but right now it is showing a little bit of weakness in the after hours at that level. And then looking at stocks that did not have really good earnings right now today, you can see Tesla down 3.3%, nothing to save them. They did go below 280, did close above it, momentum fading. This is probably a sell here now, looking for a 264 touch. And then looking at NVIDIA, even with the strong CapEx numbers, we'll see if that goes any higher. Did they have any movement after hours? Sure enough, they did, right? So there's still big CapEx spending, and with that, NVIDIA went higher, 3%, a little bit over 3% on that, headed back towards that 116 level, with 106 holding, pushing towards the trend, 114, and then the level 116. So NVIDIA getting a nice push off of the CapEx numbers from Microsoft. Moving over to staples and discretionaries, you can see staples had a really strong move. This is recessionary play, in my opinion. Gap up huge on that terrible GDP number. People are looking for staples. People are looking for things that are going to continue to do well. And you have to expect that big tech is also defensive in here. I think that's why big tech is doing so well, even in the recessionary move that we saw on GDP numbers. So the level 81.85, 82.53 is the next level. And then you can see here, discretionaries did end up negative, down about 1%, still held above 197.14. That was the level, came all the way down to 193, touched that 9 EMA, bounced. Momentum stepping down. Interesting. We're starting to see what I thought was more likely to be the case, where you had a high, slightly higher high, looking for a low, higher low setup in here. 21 EMA touch is what I wanted to see. We did not get that, and it still may do it. It still may come down into that zone and push higher, but right now, for me, this still really looks like a bear flag, but that could go on for a while. This is a daily chart. Moving over to breadth, 20-day breadth was negative on the day. Like I said, it just doesn't really go much higher than this. And you can see that step down on momentum. That is the concern, right? So we're going to see this kind of flatten and sell, and that is going to bring markets with it, in my opinion. Are we going to see a change in structure to the downside? Maybe, maybe not. But in the short term, we're expecting at least a little bit of a sell. And then looking at 50-day, pushed above that 40 level. We said the 144 was in play at 45.89, and then that 52.81 level above it at the 200, watching this zone here. This is really where I think this is going to terminate, even if we do get through this kind of consolidation high. Momentum is really aggressive, RSI still bullish, so it could absolutely continue to go, but I would expect it to kind of stall out in this 50 to kind of 57 area. Moving over to the dollar has not done much of anything. It did have a little bit of rally here, did push close to the level 99.83, but this continues to be bearish in my opinion, continues to consolidate below the level. Weak dollar because of weak economic dynamics, weak GDP, high tariffs, just not a good environment for the dollar, and I think that is what's weighing on markets as well. And then looking at bonds here, bonds had a not so great day. J&K falling about 0.5%, TLT falling just a little bit more than that. Still holding the level though, 89.16. Want to see it hold above that level. Momentum still bullish, but showing just a potential for a little bit of a pullback there. We said anything below 89 is a buy up range. We are above that right now. I still like it here, but I could see why others might not, even though I still believe we're going to get 1 or 2 cuts potentially into the end of the year. Moving over to the VIX. The VIX is showing a potential for a little bit of a move higher here. The VIX did not fall even with that bounce that we got, and we did get a step towards bullish momentum on the VIX. The last time we saw that, it was a massive move here. Is that going to be what happens again? I don't think so necessarily, but there is definitely some signs of life in the VIX. It's holding in the same level. It was bullish on the day. Does this push back into this kind of 37 to 40 area? I wouldn't rule it out, but is it going to happen imminently? It's hard to say. Moving over to my accounts, I had a not great day. Like I said, I got squeezed on that 471 level break, and I just did not want to take it to the bull side. I didn't feel comfortable. I still believe that we are going to see a reversal. I think we're just extended here. Whether we get a lower high or not, I think you could argue either way, but eventually we are going to see a pullback of a couple of percentage points, and then you could argue for that higher low setup or not. And that's why I've been holding off here. The structure is bullish for sure in the short term, and I can see why traders are looking at it that way. But for me, I just want to be patient here. The medium to long-term structure is still bearish, in my opinion. Let me know down in the comment section what you think of those GDP numbers. Is it the start of an upcoming recession? Let me know. Otherwise, are the earnings going to continue to lead us higher? Can Microsoft be the start of a bigger push? Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.